Yo, I ain't even gonna hold you.
The biggest event of the year is 4 weeks away. What's up, y'all? We back. Market Mondays. What's the deal? 21st of July, man. Every Monday is a multiple of 7 this month. Just so you know.
Oh, okay.
Yeah, a little fun.
Mathematics.
Hopefully everybody's had a great weekend. Shout out to everybody that has invested. Shout out to everybody that's sharing information. Love it all. We here back, man, healthy, which is most important. I see everybody out there getting their exercise on. Shout out to everybody. Health is
proud of you on that bike. Ooh.
I'm out there. If you see me out there, you know, if you got, you know what I mean? Don't chuck a deuce. Some people like hit their horns. Just don't distract me, man. I'm trying to hit some all-time highs here. Appreciate y'all. So Shotty yesterday. He was out in that track. I said, yo, bro, it's like 96 out here.
Gotta get it done.
They're perfect conditions.
Remember guy in Warrior, bro. He got the Olympic Jordan beard. You got there hooping. My boy everywhere at the rucker. Like, yo, Shotty outside. I'm like, I see you. My boy everywhere.
Liable to see. You're gonna see us.
For sure.
That's a fact. But yeah, thank you to everybody that's tapping in. A lot to talk about. We have a special guest, John Hope Bryant, who's gonna be joining us shortly.
Yep.
Earn Your Leisure. We got a big episode this Thursday at 6 o'clock. Shout out to 85 South.
Hey.
It will be in the building. We got to be a sit-down conversation with 85 South. Very good conversation. Entertaining, as always. Yeah. So
you call them in Ross and Repair or whatever. It hurt my heart.
Yeah. That's I don't like what's going on.
If anybody can do it, y'all can do it.
I don't like what's going on.
You gotta have a sit down.
Yeah, I don't really like it. Shout out to the guys, though. That's home team.
I seen him in DC was going back and forth. But yeah, shout out to Carlos, DC. Shout out to Chico Bean. Shout out to the whole crew, man. So yeah, check that out. 6 o'clock on Earn Your Leisure's YouTube channel, 85 South.
Yeah.
And then Wednesday, we back with Blackout.
10
o'clock Eastern Standard Time. We got a lot to talk about for sure. It's been an eventful week last week. So
for sure.
It's a lot going on.
That's a fact. Shout out to Alicia Little. If anybody didn't check out that episode, man, just a phenomenal. I got a few DMs about that. Like I had to watch that a few times, take notes, and actually apply it in real time. So if you didn't check out that episode, go back and run that, man. That's a big one. It should be at InvestFest too. So make sure y'all tap in.
Yeah, for sure. All right, let's get it. Wait.
We got congratulations in order.
Oh my God.
Yo, we in the presence of the stock trader of the year.
Decade, now for the record.
We might have to change the award to the decade, right? But like, yo, congratulations, my brother. So you brought some awards this weekend.
Congratulations.
Yeah. And congratulations to y'all too. Hey, shout out to the squad. Xander, that podcast of the year award came up, right? Earn Your Leisure, Market Mondays, High Level, Blackout. Xander's like, all your friends are up there.
He will be accepting the award on our behalf.
For real. Shout out to everybody I saw there. I had a really great time, but I had a blast with Xander and embarrassing him. He didn't want to come on stage, so that's always fun.
Shout out to Melanin Money. They did it. People don't know who we're referring to. Melanin Money did an award show. And they'll be at InvestFest too, speaking.
Yep. Shout out to Jordan Carter.
Yep. Good guys.
They did an award show, and Ian won Investor of the Year, and then Market Mondays won Podcast of the Year. So yeah.
George Mello Award, please, so I can
we'll see you in a few. We'll see you in
a few. Pull up.
Carter, what's up, bro?
Yeah, but yeah, congratulations, man, for sure.
Thank you, man. Gracias.
Well deserved.
Everything earned.
For sure.
Any announcements?
I have one, but I'm gonna be nice. Tune in to Black. Oh, I wish Rashad would participate in this mess. Anyway, if you want to get rich from the market, go to einvest.com, where to get in, where to get out. The stocks to invest in that are going to free you now and all the way to 2040. If I made you money, please put yes in chat. Tune into Blackout this Wednesday. And I'm ready for InvestFest. Oh, no stock club call this week because I will be prepping for InvestFest. I won't be answering calls about anything. So unless Sam Altman call or my dad call or y'all call, no, I'm sorry. So I'm getting ready. Get your tickets to InvestFest. If you miss out, you deserve to be broke. I love you. Sorry. Sorry, somebody told me they made $4 million off Nvidia. I'm like, yo, when you come to Stock Club, he like, for what? High achievement.
I got it.
Yep.
I got it from here. Oh man, yeah, y'all know how this works. I might actually change the disclaimer, man. Our content is intended to be used and must be used for informational and motivational purposes only.
Yep.
Yeah, it's very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on the show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. This is a message brought to you by the good brothers at Earn Your Leisure and the good brother Ian Dunlap, the master investor himself. Continue to do the research, share the research. Let's make money. Let's spread wealth. Let's spread knowledge. Let's share resources, y'all. Let's do this together. Love is love.
Let's get it.
And public service announcements. I want to be clear. I'm not speaking for Rashad, but I'm gonna speak and me. We have not changed. That little poster I put on the internet last week shook up the internet. Put in 2017 Bitcoin, Litecoin. Ooh. Didn't go so well. Ethereum, XRP, hold for 10 years. Rashad, been holding. The name of the game is to hold every asset class. Let's stop arguing for content, please.
Please.
The name of the game is just to hold every asset on earth that matters. I love you.
So let's get into it. Okay, so Bitcoin. Briefly touching over 123,000. You know, last week was crypto week. So that's in the past now. So we've seen the results of crypto week, right? We see Bitcoin peaked all-time highs, back down a little bit, but you know, hovering around that 119, 120 mark. You see Ethereum around $3,800. We see XRP $33.06. So the crypto boom is happening again. So what can we expect this time? And do the moves genuinely reflect sustainable institutional flows or simply Fed speculation?
I think, of course, crypto is here to stay. I think what crypto week really signified was them taking it over from the people and being an asset class that they're going to own to make sure that they remain in power. And they own, once again, even the decision to own every asset class on earth that matters. I learned that from reading what banking institutions do. So we can't say that it's speculative. I stated before, I thought the banks are going to take it over. This confirms it. It also confirms that people don't care about decentralization when there's gains to be had and it being centralized or it being controlled by certain forces. Bitcoin will continue to rise. I think they are the leader. I know some of you who love Ethereum were mad at my Harold Miner take. I'll say Kobe.
yeah. Say that again.
So tired of y'all, yo. Yo, I was caught on Ethereum all year till David Sachs got in office. Cool. Nice bounce. It's still not Bitcoin. But good run. Hold every asset class for 5 to 10 years, the big four in crypto, and I think you'll be A-okay. It's a message we've been screaming forever. So
yeah, I think I'll just add to that, just watching where the money's going, right? So one of the things that we talked about is watching the net inflows into crypto. And if you've been watching them over the past 6 months, you've seen a steady growth, nothing explosive, but a steady growth. And that has continued. Obviously, crypto week was huge. The president signed into law the Genius Act, which is to help regulating stablecoins, which is kind of why we saw Ethereum move the way it moved, right? It had been, like you said, I told you, Harold Miner was just completely disrespectful, but it's time.
Was funny though.
You know what? When it got clipped up, it stopped right there. It was like, I was like, damn. Yeah, but you can see why in terms of what Ethereum brings and what it means to the crypto space, why having the Genius Act and having the Stablecoin Act being signed into law would help it move. And obviously we know Bitcoin dominance. And so that is something, and shout out to our boy Austin, keeping track of Bitcoin dominance, right? When you see it in between 40 to 60%, it means something about the entire market. When you start to see the altcoins start to rise, that tells you something about the market. So watching inflows and watching dominance inside the space will tell you where we're headed. And we've seen it. We've seen it. And then, of course, you have like federal policy, and you have interest rates and how that affects, or what we've seen, how it affected Bitcoin over the past few years. Obviously, we're talking about raising rates, and we're talking about inflation and how Bitcoin has been used as a storage place for people to park money. And so if rates don't get reduced, we could see this thing keep going, right? Absolutely. I know that all signs are pointing to September as the first rate cut. We'll see what happens. But it's not going to stop here. I think we're still on that upward trajectory for Bitcoin and potentially the entire space.
I want to see the crypto movement have an Occupy Wall Street moment, though. Like, I want for audience, does anyone care about all the government involvement in crypto? And they just took it away, the entire plan. And while they increase inflation and debt to GDP keeps rising, they then come in with the investment, which I'm happy that Vlad got, to make sure every newborn gets $1,000 invested into the market. Then stable coins are initiated, and now everyone's all of a sudden pro crypto, pro XRP, pro Ethereum. Everyone's doing their Michael Saylor derivative strategy now as a result.
Yeah, that's a great point. So when you speak Occupy, I'm thinking like, how do we take it back? So here's the real question. It's like an inflection point. Do you try to take it back when you're making money?
It's too late. Already sold out.
People gonna want the money every time.
Yep, and the banks know that.
Exactly. Exactly.
So,
all right. Well, talking about another hot investment, Netflix, one of the best performing stocks this year. Said that in 2025, it said that their ad supported tier will double revenue this year. So is that a signal that the stock will have a continuous run, or will we see some pullback because it's already gone up almost 300% in the last couple of years?
I mean, they are the preeminent platform to have content on. They are the HBO of our era. And I don't think they get enough credit for how well they have run that business. The fight was pretty good that was on last weekend. The WWE edition, possibly the UFC edition, has helped a lot. I just think they've run this business incredibly well. And then if they can find a way to double and then maybe even triple in 3 or 4 years that ad-supported tier while having premium content and a premium price, I don't see, even I have all the other subscriptions to have Prime and Max or HBO Max, whatever it's called now. No one's better. The only competition probably is Google/YouTube. And I think there are leaps and bounds in terms of quality of content. So will they have a pullback? For sure. But I don't think it's a pullback that will go into correction territory. If I can get them at, I don't know, probably a 10% drop from here, I'll be happy. But this stock has done incredibly well, and that management has to get a lot of credit for doing well and just kicking Apple's back in on that side of the business as well.
Yeah. And I know people were a little confused, and we've gone over this a few times. A company reports its earnings, it beats on every line: revenue, earnings per share, free cash flow, operating income.
That's insane.
And the full year beat on all those lines, and the company still sees the stock pullback of like 5%. What you have to take into account is where it came from. And so if you look at December, when it was sitting around $840, currently trading over $1,200, it's had a nice run up here. The problem is it might have run up too high,
too fast.
And so what you'll see is people take profit, and that's fine. That's part of the game. I don't see a correction happening for it. Like you said, it's the leader in the space. It's going to continue to be the leader in the space. And I still think it has room for expansion in terms of, yes, America is a dominant market, but there's still countries, there's still areas and regions that do not have this service. And you could try to replicate it, but nobody's done it successfully. In terms of competitors, yes, Disney has been there in terms of the amount of subscribers. I know Netflix is no longer sharing their subscriber count. But Disney has a problem, and we talked about it, and hopefully they'll solve it in terms of live sports and ESPN and how that was a debt trap for them. And Netflix has solved it. And in fact, they've actually added sports. Like I said, that
absolutely.
And you know who they just signed? They just signed Max Kellerman.
No way. What?
Yeah. So Max Kellerman is now on Netflix for boxing, and they're gonna have the number one
smart.
Fight. Yeah, we're just months away from it. It's gonna be by far the most watched fight of all time. They have that under their belt. Obviously, they're doing football. We'll see what they can do in terms of college sports. I know TNT signed a college football, but who knows what happens with college basketball, the way things are looking. So yeah, Netflix is here to stay. I'd be surprised if over the next year they don't split.
I was just going to ask that, is it time for a split? I mean, because their 52-week low was what, 588, 587? High as 1340. Yep. Yeah, high as 1341. I think it may be time for a split. I'm sure the shareholders who have been there for 10 to 15 years may not want it, but it may be time. It may be time.
Yeah, it's run that hot. And so now the valuation for the company has risen to a point where who else in the space has that type of valuation? Nobody's near them. Yeah, it might be a time. It might be time.
Rashad, do you think they should split, or they should keep the price where it is currently?
Yeah, I think a split would be helpful, especially if it gets close to that $2,000 range, $1,500.
Yeah,
gotta look at that for sure. Yeah.
Just a couple stats on Netflix. Free cash flow, $8.5 billion. Let's see. Altman Z-score, which I've talked about at InvestFest last year, but it's the probability of them going out of business or bankrupt, is 13 out of 100. Almost impossible. Beta is 1.62, 52-week high. Like I said, it's 1341. The stock has just been on a absolute tear. What especially in that industry, gross margin is 48%. Their operating margin is 29%. They're netting 24 for a cost heavy. And I remember when the conversation was, is investing in premium evergreen content going to collapse them? And they just found a way.
They figured it out
to be better.
Yeah, they figured out how to get content at a lower price. You know what it reminds me of, and it's starting to feel like when we were watching Video Report, and is good is not good enough anymore. Like great is not good enough
anymore.
They're
so great. Yep.
Yeah, to see it pull back after it beat on everything is one of those times where it's like, hey, yeah, they beat. I know operating cash flow is something that they were big on, and it still beat it. Yeah, it only beat it by 300 million, 400 million, but it's still a beat, right? If you're not growing, then you're declining, and they've grown, and so it's just one of those cases. Is good enough? Is great good enough? I'm with them long term.
Good sign. Fidelity added 1.3 million shares in March as well too. So if you want to see what the whales are doing, them and State Street have added some shares. So maybe a pullback if it ever gets back to definitely 900 range. But if we get to, I don't know, 1188, which sounds crazy, it should be a good entry point into the stock. Yeah, if you have not been investing into it.
And I gave a great ETF, and everybody, shout out to everybody in EYLU, shout out to everybody that was with us in the class on Thursday. If you look up which ETF has the largest allocation to Netflix, you will find that FDN. It's a good ETF. It's performed well for us this year. If you can't get a share of Netflix at 1,200, that would be a nice alternative.
Look at you giving back to the people after
you see what I'm saying, man.
Keep going.
I'm just trying to get nominated for Stock Trade of the Year, man.
You funny. Shadi, what's the Chinese ETF?
TBD. That's the ticket.
Invest with Invesco.
Yes, you should.
Royalty Online. I saw that bill. I said, "Ooh."
Invest with Invesco.
Do you still think that we will see a pullback in the summer, or no?
Yes, it may not be as dramatic as last year, but this is the thing. Even with pullback, so like when a pullback happened in April, I called the time in which we recover. It recovered quicker than that. My advice is when we get the pullbacks, I think we have a preponderance of evidence to show the returns are going to be there. invest in a pullback though. A lot of times, how many people do you know who watch the show and be like, well, I saw the move in April, but then I missed out. So I don't think that the move would be as dramatic as it was last year, but do I think we would get a pullback as a result? And what's not being talked about in some of the mismanagement of things that he may do in office? The bright side to Trump being in office is the volatility that he will give to the markets. I've seen him in office twice. Trading is dramatically different and more volatile with him in office, but man, the returns are way higher. You can say it's nefarious, or even the push in crypto. I don't know if under another administration we would have gotten this. And even the idea to have kids automatically invested into the stock market is a brilliant idea. I don't know if another administration would have done that. So will it be as steep? I don't think so, but we definitely will have a pullback in August.
Yeah, he's putting his name on that $1,000 too. Did you see it?
Rashad talked about this before. Like Trump ran everything money wise.
Yeah, from a historical standpoint, since 1980, August ranks as the weakest month for the S&P with a flat to negative average return. August 1st is the deadline for tariffs for the EU and I think a few other regions of the world. And so depending on how that goes, they said they're not going to push the goal line any further. August is going to be the hard deadline. And so we will see if that is true, then this will hold true as well. We saw pullbacks in April. Like you said, I don't think it'll be as drastic.
Yeah.
And then from another historical standpoint, post-July strength. So we've had a positive July this year thus far. That often leads to mid and mild August mean reversion pullback of 3 to 5%, especially when the sentiment and valuations are strengthened. And so we keep talking about, hey, valuations are running high. We're going to see what happens because of the tariffs that were enacted in second quarter. We're not seeing it. We're starting it. This is a big week. Obviously, tech
for sure.
Companies are going to be reporting their second quarter earnings reports. So we'll see. But historically, August has been that month. And over the past 5 years, we've seen it happen in late August, mid to late August, and then it runs into September as well.
Yeah,
a few times it's gone into October, but by the end of the year, we have seen a great appreciation at the end. So yeah, man, when we say the time is amongst us, in the next few weeks, we should see some volatility historically.
Once again, one of the main talking points at InvestFest: hold it for 10 years. Go look at the return of Broadcom, QQQ, Bitcoin, AMD, Nvidia, Microsoft, Apple, Netflix. All of these issues go away if you hold for a 10-year period. It's not the sexy advice that you want to hear, but if you want to get rich, that is definitely the advice that I'm going to give to you. Even if you think you don't have 10 years left, make sure that you have your trust set up so it rolls over to your family. But all the short-term concern, that goes away with holding a quality asset for a long period of time.
Yeah. No.
Yep.
All right. So do you think that, talking about crypto, do you think that a digital asset will ever dethrone the US dollar as the world's reserve currency?
No, but I think it will help stabilize our dollar as the value of it has decreased. I don't know, because my little banking friends won't tell me nothing no more because they don't want me to run and tell it on here. But I do think the implementation of stable coins at some point and how they're involved in crypto is going to be done to help stabilize the dollar. I don't know, because of the oil and petrodollar regime, if they can transfer the petrodollar agreement into crypto. But I don't think a country can afford to make a digital currency its primary currency if it's been running this long. Shadi, you're a historian, so I don't know. You would know more than I. I just think politically that can send some shockwaves, and then I think other countries could pose and posture themselves. Like, hypothetically, if we went to Bitcoin as a national reserve, wouldn't that make Michael Saylor automatically king? To fight amongst the kingmakers already. It's tough. So those are the parts of, and that's above my pay grade. That we get to the Bilderberg. Ooh, I want to smoke. But those are conversations you have to think about. If we're going to change the entire structure of what currency looks like and how we exchange, even if it should be done, if other people own more of that asset more than the Federal Reserve, which is
problem. You want to take it?
Yeah, I mean, well, we at some point in time, the American dollar is not going to be the world's reserve currency. It's not going to do that forever, right?
Yeah.
True.
It might be 10 years, it might be 1,000 years, who knows?
Mm-hmm.
But that's what we know, right? Like the reason why it's the world's reserve currency now is that it was agreed upon, and America, superpower, world's strongest nation, right? So, bully pulpit. So when America is no longer the world's strongest nation, that's when it will no longer have the reserve currency, probably. So who will have the reserve currency at that point in time? I don't know.
Yeah, I don't know.
Probably won't be Bitcoin, because Bitcoin is not tied to any one particular country. And but it may be another form of digital asset, cryptocurrency that is more tied to a specific country, perhaps. But it'll be interesting to see. But yeah, the dollar will not be the reserve currency for the world forever.
Forever, I agree.
Forever is a long time. I'm with y'all. I don't see it happening. Ian, to your point of the fact that the amount of financial reshaping that you would have to do globally,
that's a great term.
Political reshaping that you'd have to do globally. I don't think it's a replace situation. I agree with you, Shadi. It's not a forever thing. I think in the short term, and I guess maybe in our lifetime, who knows? But maybe we'll be here for another 150 years. I think it's a mixture. I think it's the dollar plus a digital ecosystem. I think it's along with, because even if you think about stable coins, what makes it stable? The dollar, right? So even inside of that system, the dollar is still holds strong, and so we'll see what happens. I think it'll be a coexist. I think yes, you have the dollar, but you also have digital ecosystems until that point where it's like it's not the dollar anymore. Then we're talking about complete change, a complete global change.
Was Web3 a failure?
You know what? Somebody was talking about Web 2, Web 3. The definitions have changed. I don't know if it's a failure.
The reshaping, the reimagining. The way they did the recession. That's the tricky part. It's like we're just in interesting times. And to your point, when the forces were stronger and we had still have strongest military presence on earth. But if BRICS adopts or creates a digital currency, how does that look? A lot of this has to do with timing. But I think it's interesting, all the banks, institutions, and even in business, everyone hedging now with crypto when they hated it is definitely a sign of something to come.
Yeah, I think that the new idea of Web3, and maybe it's the old idea and it's been reshaped, is the fact that today, presently, we interact with the internet, and going forward, we'll have AI agents that will interact with the internet on our behalf. It won't be us typing, and it won't be us typing in searches and creating. Those things will be created for us through AI. So if that is the Web3, I can't say we failed yet because we didn't get there yet, but we're on the cusp of it for sure.
To Chris Johnson's point, the value of the dollar has fallen 96% since 1913. So it's not that much room left for it to go to.
Still got 4%.
Firepower. It's like, bro.
So you're saying there's a chance.
Let's talk about Block.
Yeah,
that's the company. Obviously, used to be Square. It was a lot surrounding that. At one point in time, you said that Square was going to be the next JP Morgan.
Chase. They killed my career with it, and
so we
shot. Listen,
we get everything else.
We have Jack Dorsey. We have Jack Dorsey coming speaking at InvestFest. So maybe that's a question that we can ask him as far as like the roadmap of what happened to the stock. But okay,
going to Bilderberger. I don't know if you can tell the truth. Listen, I was on the phone with some people at JP Morgan when they laughed when I said that, and they told their plan how they're going to take over crypto, and did it. It's a dirty game. Shout out to everybody, JP Morgan, James Pierpont, 1 and 2.
Okay, so yeah, so let's talk about that. You know, Block had an interesting time for sure, to say the least. But yeah, it's kind of been on the move recently, at least, and almost at like $80 a share. So, what's the deal with that?
I think they're catching some of the tailwind success of crypto. One good important lesson that I've learned early, though, is pioneers usually end up with the arrows in the back and not the gold. I think they were early innovators in the adoption of Bitcoin and tried to make it mainstream. I just think it was a little bit too early. And timing in this is really important. Michael Saylor is beloved now, but Cathie Wood and Jack face some opposition from trying to run this strategy. So I know they've been on the move as of recent. Definitely want to ask him, where does he think the stock will go over the next 4 or 5 years? But they're far from their highs, all-time highs, 289. So I think they were trying to reshape the way the banking looks, and I think that is still needed for sure, because banking infrastructure has not changed and it hasn't greatly benefited the people that they serve. And that's why I think you see an Ethereum come in, Bitcoin come in, Michael Saylor. And all this is really arbitrage on you're not getting enough return for the people that you're serving. That's the outcry with it. Like, if banks took care of, like, I remember when CDs were given 10% a long time ago, but I remember there was a time where like a CD was a safe investment and you can get a good return. I think the desire for NFTs, meme coins, crypto is that the returns are not high enough while the job market is falling apart, while inflation is running at an all-time high. So I think the core of all of this is banking not doing what they're supposed to do, and not taking care of their constituents the way that they should. But I think Block was the first combatant to that banking space, and they paid an ultimate price for it. But I hope they can rebound.
Yeah, they the news of them being added to the S&P has obviously helped the stock.
Promising. Yeah.
They replaced Hess, whose deal, I mean, remember they announced that deal like 2 years ago? It finally got through. So Hess has been removed. Block has been brought in. It isn't even just a Block story. I think it's a fintech story. If you look at all the fintech companies, you know, they've taken a hit. And a lot of it, I think primarily, I think you're spot on with that, right? When you think about where they were headed in terms of Bitcoin, in terms of actually accepting it on the platform 2 to 3 years ago, and now to see like, hey, Visa stablecoin, MasterCard stablecoin,
hello,
you can kind of see how they were a bit derailed, and it would be interesting to ask him some of these questions, and I'm sure he'll have insight that nobody else has
for sure.
But yeah, I mean, it's far from its all-time highs. The fintech space is still a space. I'm not touching fintech, just because of obviously.
Wait, none of fintech? Visa technically, it's a laggard.
Is it a fintech? I mean, it has fintech tendencies,
components to it.
Yes, that, I mean,
oh, like pure fintech.
Yeah. But yeah, so I mean, definitely still on the watch list. It's been on the watch list since you spoken about it in 2020. Watching it carefully, just not invested in it yet.
So what happened? What's the real story of what happened with the Square situation?
It's Bilderberg issue. What you say? Nobody bigger than the program? Me, not bigger than that program. Ooh, the little banking. No, for I was on a conference call. They were laughing, bro. I'm like, oh, you think Square gonna overtake us? We own, and they start listing all assets they own for 10 minutes. If I call the code, like, wait, did I do something wrong? She like, bro, just do the little chase events. Chill.
MasterCard, Visa, American Express, Discover at the time. I'm sure all of them had a role in making sure that this didn't work.
Capital One.
This can't work. Not now. Not till we figure out how we have implementation ready.
Which is a great lesson in learning if you're building, because everyone talks about disruption, but disruption to some is a threat to others. You have to know who you're going to sell the offboard to. That conversation goes dramatically different if they have a partnership with MasterCard or Visa, and they're going to be a facilitator, a gateway into that ecosystem. All that, we're going to take over the banking infrastructure. No. It does not. The world does not work like that. Regardless of what they say on the interwebs.
It's a Web3 conversation.
Gary Webb. Rest so. But if they come back, I'll be the first one applauding.
ISO. We're calling it ISO that day.
For sure. For sure.
So years ago you said that 20,000 was a good price to buy Bitcoin. What's the next low to boast price for Bitcoin?
Yeah, I don't want to do this. I don't want the crypto. It's a great question. The $20,000 price is never coming back. I want to be very clear if this gets clipped up. April levels. I mean, I would like it at 79,285, and then probably at, to be honest, 100,121. That banking institution and hedge fund institution buying in, and MicroStrategy being a, not saying a small institution, but in comparison to Vanguard, Invesco, State Street, they're smaller. They provide a level of liquidity and price discovery that will, I don't think Bitcoin will ever go to 55,000 ever again. You have too many whales in it. It's impossible. Like the mathematical probability of it getting to 55, given all the banks and institutions, that it is less than 3% chance. So like the 79, 80 area is going to be like the new buy-in price if we get there. Like
a few months ago, I put on Instagram that you got to like Bitcoin at 85,000.
Yeah,
gotta love it.
Yeah, we was going back and forth about that. He's like 85, I'm like 79, 85. I'm like,
yeah, in that same range. Yep.
Yeah, just grab it there. Yep. So here's another question, I guess. It's kind of based off that question. That's for depreciation, right? The low to bull price. As the Fed rate, and I know there's a lot of pressure on Powell, and I saw some of the memes. They're crazy. They call them up in the Coldplay joint.
That's hilarious.
The Coldplay meme. If he doesn't lower rates, how can we get here the next couple of months? Right, we've seen appreciation when he doesn't do it.
Well, first stop 129,634, and then I think ultimate price is like 153. 153 to 155. If he doesn't, because the argument is, even I know what. Okay, Trump wants the rates lowered. I get it, but we had quantitative easing for 13 years, 14 years. Look what it's cost the country and how much it's put debt to GDP. And to be honest, look how many terrible companies were built off zero interest financing. If I can be very honest, if rates had not been adjusted, we wouldn't have had room for Broadcom and Nvidia and AMD and Palantir go up the way. Like, these are real businesses that solve real issues. It's not Tinder for dogs. It's a lot of bullshit that got built when there was zero interest rates, and all that money was slushing around. We got SPACs that, like, I remember Virgin Galactic. It's like, you're not beating Elon and Bezos with that. I love Richard Branson. Virgin is, that was yesteryear. No, you're facing some serious competition, and you think Katy Perry wants to? Anyway, it's a lot of bullshit that got built in that environment, and I think we have a cleaner environment for businesses to get built. And we saw even in our space how many people popped up talking about investing, and we knew they had no investing acumen or nothing invested in the market. And then interest rates go up, the market resets. All this COVID money is not flying around. You get to separate the real from the fake. So I just think we just need to focus more on quality. And with inflation being the way that it is and interest being the way that it is, Bitcoin is a great way to go. And my question is still, for the vanguards of the world, what are you going to do with your indexes? Because people are watching the news, and 6 to 9% is great. But if they're seeing 40 and 60% return, why are they not going to go chase that? And everybody can't make a Bitcoin ETF.
They're going for it. Yeah, the
generation, go for it.
Yeah, that Generation Z is going for it.
Yes, and they're going to force their parents into it as a result, which will adjust the mutual fund. And I talked to some advisors this weekend about my take on the 60-40 portfolio being dead. I'm not saying it as a hot take. There's no hedge in the bond market anymore. No one. They let the bond market die so crypto can fly. No one will even address it. I get once you scale past a certain point, you have to deal in bonds. I get that. But the bond market has been negative for 5 years. If you have a uncle or grandma who's 60-40 and has $5 million in it and she lives in upstate New York, it's really hard to tell her to stay invested in that when crypto is taken off the way that it has, or just what 25% exposure would have done. So, what I know. What I do know, if you want the best prices on the market, go to eninvest.com and join the stock club if you want to know where to get in and where to get out. If you want to know the load to boat price, swing trade price, quick entry price, go to eninvest.com, join the stock club, and I'll give you prices for over 30 different companies, 90 different prices. If I ever made you money, please put yes in chat. Get your tickets to InvestFest. It is the most important year for sure.
That's a fact.
In the history of InvestFest for you to be there.
That's a fact. That is a fact. Okay. So what is the pathway that people should do as far as putting money away into the stock market? Like, how much of their check should they be putting into the stock market?
You want the safe answer or the real answer? The safe answer is whatever you can afford to do. The real answer is if you don't do 25%, they're going to inflate away any possibility of you being wealthy or free. They want a soft serfdom. Even the universal basic income idea that's being floated around, I think that is going to be available for only certain citizens. In the same way, welfare has been taken away, but corporate welfare is running rampant. You can't even depend on that because we don't have the money to do so. It's an act of financial terrorism against yourself to not put at least 25% of your money into the market, especially as a business owner. I want to be very clear. Your clients and customers don't give a damn about you.
What if somebody's not in a financial position to put 25% of their money away?
Do 10%, but a lot of y'all blow 80% of y'all money on bad relationships. Tune in to Black It on Wednesdays. Y'all been with that same bird that would in them hatchlings for 7 years with no fucking return. I get tired of hearing that. And then you hit me on Monday, yo, can I borrow $67,000? No.
67.
The fuck, you don't watch the show, you don't clip up the content. Clippers, where you at? You don't repost nothing. Yo, on the wake up, Shotty on the wake up. Yo, my G, you got 16,000 for me. I'm in arrears and child support. What?
Yo, can you call me, bro? It's an emergency, please.
Facts. Got PTSD from all. Y'all just want to check on you. No, you want to check. Invest in NVIDIA.
There goes my advice.
For real.
So
but pick a percentage you can stick with, whether it's 10%, 15%, 20%, but you should, I think 25%. Like, okay, 25% of your income invested into NVIDIA over the last 2 years would have given you what return? I talk to people all the time. Yo, you don't spend money on it. You got to stockpile the money because at some point, after the government fully takes over the semi space and crypto, the gains are going to be throttled. Every time that bill for can Congresswomen and congressmen should not be able to front trade stocks, and that should get battered down, Matumbo, every time. Why? They getting all the gains off the market. Nancy Pelosi isn't even number one.
She's not.
That's the crazy part. They always pick on her. Man, there's some people out there who what?
Yeah, she's not.
One of the greatest though, but
definitely a Hall of Famer.
So 25%, and if not, I find it interesting in America. They tell us it's too expensive to invest 25% of your income, but every company on earth finds a way for you to run negative. Sale on Saturday, Amazon sale, Prime Day sale, OnlyFans sale, Instagram every. Y'all got a sale for every, which is a way to siphon money out of your account, which is more than 25%, but you actually making money for you is an issue. Then you get mad at Rashad for being fly. That's because you ain't invested the way you should.
You've been hoodwinked. You've been bamboozled.
Bamboozled financially. So, but if you 5%, but I think most people spend more. If people factored on what they spend on dating or getting ready for the dates, it's way over 25%. I'm talking to the man.
Yeah. So like, imagine it today, like you were the financial advisor. Obviously, I mean, you practiced for years, 13, 14 years. Like, what would you say to the client today?
Yeah, same thing. I mean, you do what you can afford, but you got to do something. So you got to have discipline. I think 10% is probably something that most people can strive for, because 25% is not going to be realistic for the average person.
I'm talking to those who want to be exceptional.
No, I'm just saying as far as the average person, as far as how much money they're making versus the amount of money that they're spending. Most people live in paycheck to paycheck. So 25% of your paycheck, that's going to be difficult.
I agree.
That's difficult.
Sacrifice comes at, got to either pay it in the front or the back.
That's true. You got to have sacrifices, but I think everybody could at least try to start with 10%.
For sure.
And then do the lump sums when you have lump sums. So tax return.
For sure.
Try to put at least half of that, like put half of that or the whole thing into investment. Also, if you have a bonus at the end of the year, try to put that into it. Then try to look to see where you can save money. Christmas.
Or not go out for 2 years. I know that seems like a hard sacrifice. That helps. Hold on, I'm getting lit. Y'all not having that much fun. Y'all don't be having that much fun. The Miami trips be trash. I'll be seeing y'all. Y'all don't be having a blast.
No, it's over. Do you mention, like, let's say you sit down with a client, do you mention Bitcoin in this conversation?
Yeah, for sure.
Have to.
Yeah, for sure. But I don't think the average person is not going to go out for 2 years.
That's what I'm saying.
That's why they are going to. Can we have a real? I'm tired today. Can we have a real conversation? You either are going to sacrifice to be great now, or you're going to be fucked up forever, dog.
Forever.
For perspective, Trump is still selling shit while in office.
Yeah. He's working. He's hustling.
He's working, regardless of what the Democrats think. And y'all shadow government shit came down. He's in office. You push Trump coin. He sold a $5 million mastermind card. You get a meeting with Ivanka. When he's working that hard, kicked Elon out of office after Elon. I'm going to take the kids with the baby mama. I'm in office. The richest person on earth that's public is in office. That shit scares the fuck out of me. But y'all don't be having fun when y'all out. I see y'all. You don't have no money to have no fun. Y'all reclipping the summer clips and take me back. I bet. Sacrifice 2 years, y'all.
2 weeks.
You go get all that Louis and still don't get no women, no more. Sacrifice for 2 years. Come on, man. I'm tired, bro. No, sacrifice.
Please.
And then don't call me on the wake up for 17,000.
A hell of a call. Can y'all sacrifice, man?
Oh, we're gonna talk about y'all painters too on Blackout.
They parents?
Painters.
Oh, paint.
You Basquiaters.
We got receipts.
I know, but you're right. Most people aren't going to sacrifice not going out. But it's going to be the biggest mistake that you make is not setting down for at least a year.
You know what they the 2-year thing, I'm with you. Like that's tough. What they could sacrifice though, bro, I'm be honest with you. Eating out. That is something that you can sacrifice.
I mean, it's a lot of things that you can sacrifice.
I'm just like I look at some of these Uber Eats. I'm like, yo, damn, this adds up. So if I'm doing it, I'm sure
For
a bunch of other people are doing this at this rate, and some people are doing it on more than 2 or 3 times a week. You start adding, but people don't know their budget. They don't know how much they're making versus how much they're spending a month. But that could be a line item that is just like, all right, this is where we could cut.
Okay, let me ask you a question, Rashad. What time you go to sleep last night?
12:30.
What time you wake up?
6, something like that.
See, and you lit. Waking up late. y'all was in Connecticut. What you at? I looked at one reel. You in Connecticut speaking. Then you turn around. You at the basketball game. What?
Oh, by the way,
you gotta make what's your secret to success? You don't have to take my path, but at some point you gotta sacrifice. Even in the league, the people who sacrifice and just stayed on their craft, there may be players that are better, but they're outside a whole lot and they're out of the league or not doing as well.
Well, I will say this. When you're talking about Christmas, 36% of Americans took out holiday-related debt in 2024 season, averaging $1,100, almost $1,200, up from $1,000 in 2023. Among parents with young children, that rate is 48%. And 6-figure earners carried the highest average debt of $1,500. According to debt.com, 66% of surveyed Americans expected to go into debt this holiday season compared to 50% in previous years. And then there's a whole bunch of other stats. So I think it's a matter of having discipline to say, okay, I'm going to put away X amount of money every single month. When I get my tax return, I'm going to dedicate half, the whole thing to that. I'm going to cut back on things that I know I can cut back on. Yeah, going out, restaurants, Christmas. That's important.
Crazy. Then you get to Van Cleef and she leave you for Van Lathan.
Christmas, Valentine's Day, all of these things. All of these things are causing financial
graduation,
hardship.
Then the vacation trying to flex.
Clothing.
Another one.
Yep.
Yeah.
And then, like the CEO got caught up, then you paying for the extras, the Coldplay tickets. You too can get caught up and then lose half your fortune.
Lose it all. Lose half your fortune. Lose your job.
Crazy.
Lose your family.
In y'all contract, y'all gotta have them that has certain waivers out.
They said, nah, leave of absence. No, resign.
So yeah, I think it's a matter of just a variety of different things. But yeah, cutting back on what you can. Alcohol consumption. That's costly.
And I'm just saying this because I have a couple dollars and I don't spend on all the shit that I could spend on. I'm scared. I told you 2 years ago when Kyrie said, yo, I'm broke. I don't have enough money. Me and Dom looking in fucking Hollywood Hills, there's eagles and shit flying. I'm like, how you broke?
Nah.
What?
Alcohol consumption, and we just had this conversation the other day. The amount of trees that people are smoking. Yo, I'm in the environment. I'm like, yo, bro, this is a lot of smoke in the air. Like
a lot of premium.
How much are we spending on a daily? How much are we spending on a
and all? But
I'm just saying it is expensive.
It adds up.
Yeah, it adds up.
Yeah, but the bud app definitely is that's a major expense. So yeah, you gotta look at it. Sneakers. That's a major expense for people.
Expense. That's on my item line. I'm just gonna be honest.
Yep. Tough.
So
but go to Ghana. Cost of living way cheaper. Arbitrage is more international. I'm seeing a lot of people talking about going to Spain.
To Spain?
Yep. Cost of living.
So we just saw oh man, I forget her name. She just moved the whole family there. We actually spoke at her event in Puerto Rico. Yeah.
Yeah. So
something going on over there. Okay.
But at some point you decide to make the sacrifice early or when you're older. But the hard part with that, and we've talked about it last week, even when you get to whatever golden amount that you think is the amount that you need to be okay, they inflate that shit away. So let's say you wait 5 or 6 more years. Maybe there won't be an NVIDIA to get you 500 or 600% return. Maybe it's Anduril at that point. But what if Anduril IPOs at $350 a share because of Palantir's success? It's not even as many IPOs. It's been a dry IPO market. It's tough.
Yeah.
It's tough.
Yeah. And the ones that are making it through, I mean, like you said, we saw Circle, we saw CoreWeave. I'm sure Anduril will be in that same line. OpenAI eventually. Yeah.
Taking off.
Yeah.
Yeah. But yes, whatever you can afford, 10%, 5%.
Whatever happened to Stripe's IPO?
Missed the window.
Damn.
Generational miss.
They had them valued at over 130 billion, and now
it's timing. Yeah. A lot of things in business is timing, and that's why I be so big on execution. Like, okay, imagine if we tried to wait 3 years after the idea to do this show. Would it have been as successful? Yes. As successful? Probably not. You got to decide. Rashad, okay, you posted the clip of when you were doing broadcasting on early access. That all that prep helped you for the Steve Harvey interview. You sacrificed in. You could have been at La Marina and having a time.
Yo,
what?
I'm just trying to figure out why my episode didn't make it up there, bro.
Well, that's the first I posted. The first
I'm talking
the first one.
No, that was real. That was the first interview that I had ever.
Sacrifice.
Yeah.
No, it's facts. You got to sacrifice. That's important.
Mm-hmm.
The Treasury Secretary has said that he's calling for a review of the entire Federal Reserve System.
Oh God.
See. Whoever you got to call on from the Federal Reserve in St. Louis or wherever, just call and apologize. Listen, a couple of names: FDR, FR, them FRs, Frank Lucas. The FR, that's above my pay grade. All I will say, that's not a opponent that you want to have. It is not fair for anyone who's won against it.
Is this? I mean, are they just going to try to force Powell out after they're the ones who appointed him? Is that what? I mean, what are we doing?
Maybe we need a reimagining of who the Fed chair is.
Yeah.
But I think Powell's done a great job given all he's had to handle. Since he's been in, it's a lot that was put on his plate. I don't think there's a playbook. I know Bernanke had a lot to deal with the financial crisis, but I think we've had evolving and rolling crises since COVID, and he's handled them pretty well.
He's done a phenomenal job.
For sure.
Yeah. There was, I mean, think about the conditions that he's had to face. You're talking about a pandemic. You're talking about a brief recession. You're talking about administration change. He's handled all these things. You talk about inflation, stagflation, soft landing, and here we are. S&P all-time high. Like he's managed this pretty well.
Yep.
Now the pressure is on his back because he's not acting fast enough.
I mean, there's global conditions that you have to factor in when you make those kind of policy decisions. Like, I know Trump is a cut first, then measure kind of person. You can't do that when it comes to interest rates. It adjusts entirely. Like the tariff thing halted businesses. And if we look, the level where we're at in 2025 is kind of similar to where we were in 2007 and 6 and briefly in 2000. It's like the average for this decade is around 5 and some change. It's not like how we were in the 1980s. Like you can't. And once again, from 2008 till 2015, the interest rate was at 0.01. You can't have that forever.
Yeah.
So,
well, let's talk about two companies that's reporting tomorrow. Capital One and Texas Instruments. What's the outlook for that?
I really like Capital One. It's a slept on business, but the merger with them and Discover has helped them a lot. In April they were at 146.58. They're currently at 218. If they fall to 192.58, that's a place I would like to get in, but I definitely like Capital One a lot. And then Texas Instruments is a classic company that I don't think is talked about enough. Not one of my top 50 companies that I would look to invest in, but I would keep them on a watch list if you are looking for like a safer return, if you will. But I want to be clear, it's not in my top 50. I like the company overall. I just think there's better companies to invest in, especially in that semiconductor space. Unappreciated though.
Yeah, I like that you said that they're not in your top, your top 50. Yeah, I mean, all semis, and I said that as the number one space, all semis are not the same, but
created equal.
They're not created. But if you look at the returns for Texas Instrument especially since April, like when we had that,
for sure,
it hit its all-time high.
Mm-hmm.
It's not sitting far from it. And so like the thing is, again, I'm more concerned that people know what Texas Instrument does in terms of semi. So they control analog semiconductors, and so any medical device, sensors, voltage regulators, HVAC, radio frequencies, everything is not GPUs and CPUs.
Mm-hmm.
Some of these things are for industrial and automation, right? So like when we talk about auto vehicles, actually, so sensors inside your cars, this is what Texas Instrument does. It's a stable semi, right?
Mm-hmm.
Even inside of SMH, they have it in the top 10. It's number 6.
Okay.
Right? So you got NVIDIA, Taiwan Semiconductor, Broadcom, AMD, Applied Materials, Lam, and then Texas Instruments is right there. And so it's a top 6 holding inside of SMH.
Are they like the stable coin of the semiconductor space?
It feels like it. I feel like when we grew up, the only thing we knew Texas Instruments for were for calculators.
The calculator, yeah.
That was it. And it was the fact that they were a company that was publicly traded was like, oh, yeah, really? The calculator company? And then you realize more and more what they do and where the revenue comes from. Yeah, but it is one of those, I guess it would fit in the stable.
It's a solid company. Yeah.
Stable as a semiconductor.
Yeah.
That's good. Yeah, I like that.
In 2015, the stock was at the low was 43.49, currently at 215.79. For the tech space, they kind of under-delivered in returns, but like you said, it's more of a stable investment. But great organization and great management. I just don't think that they are talked about in that ilk of AMD, NVIDIA, Broadcom, TSM. So like over 5 years, they've given 59% return. The sector's given 600%. Like they've underperformed, but if you're looking for stability, very little drawdown, reliable returns, that's a good company to invest in, but it's not in my top 50.
Yeah. That was true. Should I run down some of the companies that are going to be reporting this week?
Yes.
All right, let's do that. So Coca-Cola will be reporting before opening tomorrow. RTX, we've been talking about in terms of defense AI and defense tech.
RTX is amazing.
We're reporting. We just talked about Texas Instrument. Big week. Tesla's will be reporting on Wednesday after close. Google, ServiceNow, IBM, Chipotle, GE, Vernova. When we talked about who's creating the energy for the data center economy, those are one of the companies that you should know. So we'll be seeing what they're doing.
They're on fire.
We got Thursday, Ian's favorite, Intel.
I hope they have a good quarter. I really do.
We'll be reporting American Airlines. We got Honeywell as well on there. And then on Friday, anything huge? Well, Charter Communications.
Okay.
We'll be reporting. So this is kind of that kickoff to the Mag 7. And I know there's a new acronym that's been going around, but the Mag 7 kickoff with Google starting this week happens. And then the next week we'll start with the Microsofts and Apples of the world, Amazon as well.
What do you think of Jim Cramer's Park? Palantir, AppLovin, Robinhood, Coinbase.
We talked about companies, I think maybe in early January, that have just had great returns in 2024. AppLovin was part of that. They took a hit and now they're starting to rebound. I like the acronym. I like it.
Acronym solid.
It's a solid, yeah. Robinhood crossed over 100. We already know about Palantir.
Good lead. Yep.
Yeah, I'm not mad at it.
It depends on the allocation too. Percentage allocation.
Sure.
Yeah.
All right. I'm on to the situation. Okay. We have our guest here that's about to join us. Let's get to it. All right, guys, we have a special guest that has joined us, John Hope Bryant, friend of the show, legend in the game. And we got a big announcement for InvestFest, but we're going to talk about that a little later. First, anytime that we get John on Market Mondays, it's always an honor and a pleasure. So
absolutely,
there's a lot going on in the world. So I think it'd be appropriate if we ask him a few questions, get some insight on how he's seeing things, if that's okay. So first and foremost, thank you for joining us. Appreciate it.
My honor, and kudos to you. As I said to you offline, kudos to both of you for going to the motherland, to Africa. I've got Mandela's prison number right here. I wear it every day. And going to China thereafter. You got to go to know.
You have to go to know.
All that you read and all that stuff, I'm sure that once you went there, your mind was like, okay, this is a whole nother thing.
Very, very eye-opening experience for sure. For sure. Well, okay. So the question I have to ask you is that we've talked about this a lot, but for entrepreneurs, specifically in our community, right? AI technology is disruptive, right? And a lot of people are scared and nervous, but it's also creating a lot of opportunities as well. How do you think entrepreneurs should be using artificial intelligence right now in 2025?
Like breathing. Somewhere below God, parallel to your most important love relationships, consistent with breathing, wellness in your body, well above entertainment, well above what you like or what you don't like. It is essential. This is Van Jones, who you should have on your show, is very underrated.
Yeah, friend of the show.
Okay, good. Well, people don't understand Van Jones. Van Jones is a genius, and they see him on CNN, but they don't understand his brain. And Jeff Bezos can give him $100 million because he had nothing else to do with his money. I just saw Jeff last week actually with Van, but a lot of the guys you were talking about before, we just saw him last week. Van says it's for basically intelligence, and I agree with him. God, the supreme intelligence, nature, biology, artificial intelligence. This is not some new technology. This is not the internet. This is not some app. This is not, going from cassette tapes to DVDs. This is not Blockbuster to Netflix. This is the closest I can give. The closest analogy I can give is it took 60 years to go from the horse and buggy to the automobile. And it was, horse-centric to automobile-centric, or animal-centric to machinery. Now you're about to go from labor to technology, not in 60 years, but in 6. And we're already 1 year into it. By 2030, you won't recognize the world we're living in. And it's already happening. Go to CVS, go to Walgreens, go to the grocery store. 5 years ago, it was 10 people on the checkout line, and there was a test thing called self-checkout. Now you go to the same place, and it's 10 self-checkout, one person trying to make sure you're not stealing. Sorry, oversight, sorry, customer service. And the checkout lanes for humans are basically shut down. You go to a fast food restaurant. And by the way, we don't get credit for that drive-through window, which it indirectly came from us because Uber and Lyft, really, one could argue, came from black taxis. In the 50s, when Dr. King in the 60s would shut down an economy and tell people to get off the bus because you couldn't sit in the front, they had our own series of black taxi drivers. My man knows the story. Where we just transported ourselves around with private automobiles. That's Uber and Lyft today, by the way. But anyway, the drive-through windows, we had to go through the side window in the back to get the food. I can't prove it. We certainly didn't get the patent. But one could argue that is a legacy of us. Anyway, these fast food restaurants, you go to them, it used to be 20 people there, 10 people there, 8 people working in there. Now it's 3, right? And is it robotics? And I was in Amsterdam going to somewhere 3 months ago. And, you know, you go to Atlanta airport, and you got too many of us with a high school education and a phone and a smartphone being used as a dumb phone, and we're sitting in the corner where the wheelchair drop. You know, you push the wheelchair, and they're sitting in the corner between wheelchair pushers doing this, scrolling their phone on entertainment. That you're whistling past the graveyard. Your job is dead. You just don't know it. I'm in Amsterdam. Come right next to me, a human voice. Excuse me. I turn around. There's nobody there. I look down. It's a wheelchair. The wheelchair comes past me. It just drops somebody off at the gate. Comes back to the self parking area for automated wheelchairs. Pulls itself in and waits for the next person and says, "Can I help you? What gate would you like to go to?" No humans. This is now. Within 5 years, by 2030, you're going to have 300 million virtual humanoid robots, which means you're on the phone with them and you can't tell that it's not the Earn Your Leisure guys. You can't tell. And within 20 years, and I think they'll do it faster, you're going to have 300 million humanoid robots. Did you hear me? Walking amongst you.
300 million?
300 million humanoid robots. I mean, there's so many directions we can go with this. Like, I probably shouldn't be saying this, but like, there's certain human trades that just might go away. I'll let you figure out what I'm saying.
I mean, what you're talking about is the urgency. That's kind of the work that we've been doing. I know that's the work you've been doing, is trying to express the amount of urgency about this time from an investor standpoint, but from an innovation standpoint. I think the root of it, and maybe we can start there, is the education point, right? Like when we talk about other parts of the world and the educational process around this space, around agentic AI, around artificial intelligence, is far superior to what we're doing here. How do we change that? Like, where do we start with the education part for the youth and obviously for a lot of the adults? Because even the adults our age have no clue. Yeah, they know ChatGPT, that's it.
Yeah. So by the way, I'm co-chair of the AI Ethics Council, which I know you know that, but the audience may not, with Sam Altman, who I believe is the Steve Jobs of this generation. For sure. I made sure to put all the HBCU presidents here on that board, along with Dr. King's daughter, Bernice King, and Ambassador Andrew Young at 93 is on it. By the way, he's interested in AI. Van Jones is on it. Reid Hoffman is on it. And so we just launched the AI LP3 last week in Atlanta with Georgia State University, all the HBCUs, Atlanta Public Schools, Mayor Dickens, really cultivating a pipeline of prosperity of AI talent from kindergarten, so from middle school, high school, and college, precisely because what you're talking about, and it's best I can tell, it's the only model like that in the country. Press release just issued this morning if you want to read about it. We had 50 kids. I think this will be 500 kids within 2 years, or 5,000 kids, and every city I think will be doing this. Here's the good news. China's good at copying stuff, not at innovating it from scratch. They're great at copying. This is going to be a technology that in the short term, copying is a cheat sheet, which, as you know, so China has moved ahead in that regard. Late last year, they were 4 months behind us, so I'm sure they've caught up. But what's going to happen is you're going to have a disruption of jobs. If you're going to have a 30% efficiency ratio, the first thing's going to happen is costs are going to come out of the capitalist system, free enterprise system. Removal of costs. Nobody knows how to make money. They figure out how to reduce costs. That's you and me. But it's not just you and me, not just you, black people. It's professionals, lawyers, accountants, assurance professionals, anything that can be processed, mortgage professionals, it's gone. Now, the problem is that there's a new iteration of jobs coming, but my guess is going to be a 3-year lag between the old jobs and the new plan for new jobs. They shouldn't be, by the way, our government shouldn't be destroying the Department of Education. They should be retooling it for financial literacy and AI literacy at scale, like the new Marshall Plan, right? Because that's what happened after World War II, a Marshall Plan, which is a mortgage for a new home, a trade for a new job, as much education you shove down your throat for, at that point, people who are 99% Caucasian coming back from the military, even though we were there, they didn't get the benefits. They need now all of us, our white rural brothers and sisters are in the same spot that we're in. By the way, white professionals are in the same spot that we're in, but we have a creativity. When as you know, black folks, when we say something's cool, it's cool in Taipei. It's cool in Taiwan. It's cool in North Korea. When we say it's a dud in Russia. We just need to go from creativity and cool and culture to capitalism and commerce. This is what we have to master now. And if we bring our creativity to this, because the playing field is now level. 99% of black folks don't know a thing about AI. But 99% of white folks don't know a thing about AI either. Right? It's mutual opportunity discrimination. And everything, please, audience, hear me when I say this. Everything's about to be remade. This chair, AI in chairs, AI in the mic that my brother's using, AI in graphics manufacturing behind you, AI in t-shirt manufacturing, like literally AI in NBA sports, AI in sports, AI, literally everything's gonna be remade. So we have an opportunity on a level playing field to do two things. One, to go into artificial intelligence using our innovation, our creativity, our ability to AI is not going to replace your job. You're going to be replaced by somebody who understands how to control and run AI. If you can control and run AI, by the way, you don't need a 4-year education for this. You don't need a 2-year education for this. I don't know what's going to 4-year colleges. It's a whole nother conversation.
Yeah.
You can do this in a 4-week, 4 months, certainly 1 year certification. By the way, coding, gone. Like, gone.
They don't want to hear it, but yep.
Gone, right? We were talking about, and I love, all the coding discussion. And I had a coding lab, but AI does it for you. So we, with our creativity and our pulse and our cultural progressiveness, can get on the back end of AI, get skilled in this really quickly, and become thought leaders, cultural leaders, product leaders, brand leaders, post leaders, business leaders. Now you combine that with the $100 trillion of wealth is going to transfer in the next 10 years. In fact, you've got more people over 65 than under age 18. And those under age 18 look like you and me. And those over 65 are my white brothers and sisters who are all trying to go play golf at the same time. And 15 trillion of that $100 trillion wealth transfer over the next 10 years are businesses. So am I going too fast?
No, you're doing great.
Keep cooking.
So the heritage was going to go, the stocks, the bonds, the cash, the houses, that's going to go to wives, husbands, children, nieces, nephews. They don't want the businesses. It's too much work.
Yeah.
You have $15 trillion worth. Please, audience, please hear me. You have $15 trillion worth of stable, successful, nothing wrong with them businesses. They have cash flows. They have real estate. They got client lists. So, and now let's go from high tech now to just no tech. Because, by the way, you can't AI plumbers. You can't AI electrician.
Yeah.
Right?
Yeah.
There are trades that we can master that are going to be in an enormous supply. You need 50,000 plumbers a year today. There's a deficit. It's about the same for electricians. So if we take the trades plus we take the trade, we go and buy these businesses. Now, here's a low-tech solution. Go to Ubi, Iowa. Go to, I don't know, Tulsa, Oklahoma. It doesn't matter where it is. Find the biggest dentist franchise in Tulsa. I mean, Cincinnati. It doesn't matter where it is. Find the biggest plumbing. You gotta go to Joe's Plumbing. Oh, you can only go to this dentist. They have 3, 6, 8 offices. Go in there. That guy or that lady is 60 years old, 65. Hang around them. Become their friend. They have no place. No, they've got no succession plan. Buy that business from them. They might do it in part for seller financing. You got stocks. You got real estate. You got cash flow. You have a customer list. Why are we starting a pizza restaurant with a $50,000 GoFundMe campaign with a 78% possible failure rate as a startup, when you can go buy a $5 or $10 million business that's proven to be successful, that has assets? And by the way, Wall Street will finance the majority of that for you with non-recourse financing.
Well, let's break. Can you talk about seller financing? Can you talk about non-recourse finance? Like, explain that to the audience if you can.
Yeah. So some people heard that I sold the Promise Homes Company 2 years ago, Christmas Eve. Yes, I work on Christmas Eve. And I sold it for $121 million. And then immediately I became a partner in the new joint venture. I'm trying to get out of that now, but I became a partner in the new joint venture that bought the company. And we got a $200 million facility from Barings, which is an institutional provider. I'm told it's one of the largest facility, non-entertainment, non-publicly traded in the country. That's non-recourse debt. I didn't guarantee it. The $100 million that came after that from Citigroup, non-recourse debt, no guarantee. So once you get to a point where you're doing so if you're buying one small nail salon, it's a personal guarantee. If you're doing a mortgage on your house, it's a personal guarantee. The house that I'm in now, it's in an LLC, but I had to personally guarantee it. It's my personal home. So if you're doing something small and boutique, it's personal, you're going to have to sign a personal guarantee. But if you do something that has institutional pedigree to it, I own 700 homes, owned 700 homes. I still own part of it. That was institutional. And as a result of that, I was able to access lower cost institutional debt where they're banking on the cash flows for the business. It's secured by the assets of the enterprise, which in this case was the homes. All the equity was more than sufficient. So without getting into details, let's just say I had double the equity for the debt that I was procuring. But even 70% would work in this example we're giving here. And I was selling the company below market rate in this particular example. This would also relate to the dentist office and all the stuff that you're buying from, because you'll probably get, if it's worth $2 million, they'll probably sell it to you for $1.8 million. If it's worth $5 million, and they're going to sell it to you for a multiple of cash flow, a multiple of cash flow or a multiple of profits. That's how you calculate what it's worth. And if you go to a bank or you go to a Wall Street firm, like private equity firm or a family office, let me know if I need to break that down. If it's a big enough transaction, 7-8 figures, mid seven figures, like $5 million, $8 million, $10 million, and you've got a franchise of whatever it is in that city, and it's been going for 5 or 10 years successfully, you can probably access institutional non-recourse debt, which means essentially no personal guarantee. If it goes sideways, they don't come after you personally. They're not coming after your house. Did I explain that okay? Yes.
For the average person listening tonight that may not have those relationships, can you talk about how you talk to us like we're your sons or daughters? Yeah. For those who are watching,
this is how I talk to my sons and my daughters. But go ahead.
How do you begin to
real quick? Mike Maples, who you wouldn't know that name, he's on my board. He's a venture capitalist, one of the top 20 in the country. He's in Silicon Valley. Do this real quick. His dad worked for Microsoft. So I asked him, how'd you get into this thing? Well, tell me about your family. Oh, my dad worked for Microsoft. What did he do? Oh, he worked with Bill Gates. Well, everybody technically worked for Bill Gates. Well, he ran products. You mean he was the president of products? Yes, I'm doing this real quick. I said, okay, so your dad was like a baller at Microsoft. Yes, Mike Maples Sr. Okay. He had a business. He was 10 years old. He sold candy or whatever it was. And he said, Daddy, I'm selling this company to Joe Blow, to Disney. I'm selling this company to Disney. Aren't you excited? And the father said, I'm very disappointed in you. We don't do that in our household. We don't think like that in this household. I didn't raise you to build a company to sell to Disney. I raised you to build a company to buy Disney. So this is how we should be talking to our children. This is how we should be talking to our mates, our friends, our partners, with a level of sophistication and helping people to bring their frequency up.
Elevate,
because we can do it. Where the rules are published and the playing field is level, we kill it, which is why I love what you guys do. But you got to go from the streets to the suites in this conversation. So, so now I will translate though. You said you're about to say, talk to me, talk to the audience like I would talk to my son, daughter, nephew about what?
About how to build these institutional relationships if they don't have them.
First thing you got to do is get your credit score up to 700. Otherwise, you can't even. It's like somebody going to lunch with you and saying they want to do a $5 million deal, but they can't pay for the $50 lunch. I can't tell you how many times I've had broke people come to me talking about they have a $5 million or $5 billion line of credit from China or Russia or someplace that you get from China. I'm like, come on, knock that stuff off. I said, if you had a $5 billion or $500 million line of credit, do you really think that you'd be talking to me at lunch? Don't you think that JP Morgan Chase would have that? Don't you think that Wells Fargo would have that? KKR would have that. Some investment banker would get that deal. Why are you so special? It's because this is a scam, right? Yeah. So and it unravels. So first of all, get your credit score up so you actually can walk the talk. If you can't do a $50,000 deal, don't be talking about a $5 million deal. Knock it off. So get your credit score up to 700. The average credit score for Black folks is 620 across the country. I've done that through our Hope Financial Wellness Index. You put your zip code in, I'll tell you your credit score wherever you live. Get your credit score up, get your vibration up. Don't go to the local bank branch. Find the regional credit officer for the bank. Don't go to a money center bank. Go to a regional bank or community bank that has $1 billion, $2 billion in assets, $5 billion in assets, but you can still get to the chief credit officer. You still get to the chief lending officer. If you're gonna get a no, why would you want to get a no from the branch manager? No disrespect intended from the branch manager. If I'm gonna get a no, I want a no from a boss. So I'm gonna go find. We're great at storytelling. Go find who the chief lending officer, chief credit officer is. These people who make credit decisions at a mid-sized bank. Mid-size is something with a B on top of it, billion in assets. It's not very big for a bank, but you can still access these people. Their email is on their website in most cases. Send them an email. Don't be crazy. Send an email. Hey, I'd like to buy a business in town. I've read your resume, your background. You seem like a very interesting person. I'd love to meet you. Here's a little bit about me. We're great storytellers. Most people will give you 15 minutes. So either do it virtually, do it in person. Build a rapport. Don't go in there and ask for a transaction. Don't go in there bragging about yourself. Don't go in there with your hand. Go there and find something personal about that person. Look at the photos behind their desk. Ask them about their wife, their husband, about them. No one asks them about them. Build a personal rapport, a warmth. And before the end of that meeting, that person will say, hey, by the way, thank you. This has been a great meeting. What were you here for? What do you need? What do you need? Now, the door is open. And you say, well, actually, thanks for asking. I really enjoyed meeting you. By the way, you got to be authentic about this. Can't be a game. I really enjoyed meeting you. And yes, in addition to that, I'm trying to buy the dentist's office or whatever. Okay, well, let's get you with somebody. Now, that's changed everything. Because this person's job is to say yes. The person in the branch manager, the person in middle underwriting, middle management at a corporation or a bank or a lender, their job is to say no. Why? They don't get fired for saying no. They get fired for saying yes to the wrong thing. Yep. So the answer is no. You need to go to somebody whose business it is to say yes. That's a C-suite executive. I'm just doing this quick because we don't have a lot of time. So you go to because I want to get a no. I get a no from the top. So relationship capital is everything. Why does somebody go to Harvard? Because Harvard's going to make you 3 times more smart as a state university? No, it's because the class of 2025 at Harvard is going to hook each other up for the next 50 years. Yeah, that's why you go to Harvard. Mm-hmm. Country clubs, fraternities, sororities, universities. It's a club. I can't mention where I was last week, but that's a club. You guys probably know what I'm talking about. It was in Idaho. Milken Conference, it's a club. Mm-hmm. Clinton Global Initiative, it's a club. You want to be part of that club. If you want a relationship capital because they're going to hook up their friends. If you see a board of directors with all white 65-year-old men, don't assume that's racism. It might be discrimination. Discrimination is I'm discriminating against you to do something else. But if I grew up with these guys and went to college with them, we chased girls together and we lied together or whatever at school, and I need to hire somebody who's a treasurer. I'm the chief financial officer. I need a treasurer. And I got 3 applications on my desk. One's a black, eminently experienced. One's a white woman, eminently qualified. And then the third one's a white dude I went to college with who chased women. And he didn't tell me when I cheated on a test. Which one gets hired? This is a white male now in this example. The third one. Yeah. That's discrimination. It's not racism. By the way, that's the way the world works. You have a barbecue, you invite black people to your barbecue. Are you racist? No. Are you discriminating? A little bit. I mean, it's your friends. So you're doing what's comfortable with you. We got to break up the comfort and insert us. That's why I loved you guys going to China in Africa. I've been to 100 countries. You don't go, you can't know. So this AI thing and this capital markets thing and the financial literacy thing, which I believe is a civil rights issue of this generation, financial literacy and AI literacy is everything, 100%. These pieces plus relationship capital can transform Black America in 5 years. This is the third reconstruction we're in right now, in my opinion.
Mm-hmm. So, okay. So with that being said, okay, well, let me ask you this, because I never really asked you about real estate. You like you said, do you still own those properties, or you said that you've offloaded them?
So I was 100% owner.
Okay.
Of the problem, I built it from zero to $150 million. I was 100% owner. I paid off $88 million of debt and equity Christmas Eve 2021. I own 38% of the new joint venture. I was the largest shareholder. After I sold, so I sold it for less than it was worth. It was worth 150. Sold it for 121. I was a 38% owner of the new joint venture, but I realized very quickly, because I'm a control freak, I didn't have control of the new entity, and so I was chairman or whatever. I resigned as chairman, and graciously, and I decided to let them do their thing, because that's just not the way. A camel's a horse designed by committee, and I don't do committees very well, and I have a very distinct view of how I want to do something. So God bless them and wish them well, and I have an interest in their success, right, if they succeed. But I no longer control the enterprise. By the way, businesses are meant to be grown
and sold.
Yep. You want a liquidity moment. You want to monetize it, right? So I did that, and what they call clip my coupon on Wall Street, all right? And I did that $100 million plus deal, $200 million of finance, blah, blah, blah. So I'm still but I'm now what's called an LP. You guys know I'm a limited partner.
Limited partner, yep. I'm
no longer the general partner. So I got to go along with whatever happens, but it's not personal. By the way, how can I be mad? I sold the company. I made it. I built it. I succeeded. I fulfilled my mission. In phase one, I sold it. So now I'm going to go do something else. I can't announce it yet, but I can tell you that what will happen next will start larger than what I finished Promise Homes with. So and this will be institutional. This was boutique. So I started a small business, essentially, got it to a point where I really couldn't grow it anymore by myself. And now I'm going to do something that's institutional in nature that will allow me to hopefully get it to $1 billion of assets pretty quickly and help more of our people. One of the reasons I love what I was doing at Promise Homes when I controlled it was 50% of the vendors were Black, brown, and women. So, I mean, I got to do plumbing, heating, landscaping, roofing, lighting, painting. I got to do that anyway. But if I'm a person of color, guess what I'm being more sensitive to? Okay, people of color. But if you're white and you're this is not a racist comment. If you're Caucasian and you don't know any Black people and you own this and you're on Wall Street, you're behind a computer screen, you've got no context or sense of responsibility about the community. You're trying to hit your
community. Yeah.
There you go. That's what he just said. Right? He just ended my sentence. Because it's just common sense, right? So I had to learn to take emotions and personal out of business. That was a big lesson. It's not personal. Capitalism is a gladiator sport. And it's not like we did this and failed, gentlemen. No one ever gave us a memo. That was my 4th or 5th book. No one ever gave us a memo on how this stuff works. This is what gets me so excited about what you're doing and what I'm trying to do. And what I think is a new movement from the streets to the suites, from civil rights to civil rights, is I think this is now our time to, I'm going to say something controversial here, finally give Black people a Black Jewish business plan.
I've been watching you for a long time, brother, but it feels like the last 2 years, like you're on a mission to get these lessons out. I want to ask what's driving you, and I also see that that bookshelf behind you. What are like 5 books that have had the most impact on you that you can share with our audience tonight?
Well, I'm going to mention my own books. I mean, otherwise,
of course.
Yeah. So Financial Literacy for All is the bestseller for the last 18 months. And not Black history, not Black, but just economics. I believe we can succeed on the main stage. Look, may surprise you. The books I'm going to recommend. The Road Less Traveled by Scott Peck. That's 40 years old. Mere Christianity by C.S. Lewis. That's 1940s. The 7 Spiritual Laws of Success by Deepak Chopra. Friend of mine.
Very good one.
Yeah, 70 pages. Everybody can read it. You can read it like that, or listen to it. The People of the Power of Now, I believe it's called, by Eckhart Tolle.
Tolle, yeah.
Don't listen to it; it'll drive you crazy. You want to shoot them, but read it. It's a big book, but it's worth the read. So none of these are money. None of these are business books.
Yeah.
So we're not human beings having a spiritual experience. We're spiritual beings having a human experience.
Mm-hmm.
The word capital comes from the Latin root word capitas, knowledge in the head. Books. What did Chris Rock said on the Bring Home the Pain? You want to make sure that you don't get robbed, put your money in your books. Because some folks don't read. I won't say what he said. Right? Nobody's going to go in there and steal your books. Right? They'll steal your TV, not your books. Put your money and your jewelry in a book. Carve out the book and put your stuff in the book. No one would ever touch it. No one's ever touched these books but me. I just believe that we're looking for love in all the wrong places. If you're looking at banking, it's a trust business, not a money business. You're looking at the word credit. It comes from the Latin root word credito, which means credibility. Mm-hmm. And capital comes from capitas, knowledge in the head. So here you go. Capital, knowledge, credit, credibility, banking, trust. So why are we obsessing about, I want to get this bag, I want to get this dollar, I want to get this cash, I want to get this, that's short term. All it is trading. All money is, all currency is Bitcoin. It doesn't matter. You're just trading forms of payment. I could write a check on your t-shirt with the routing number and the checking account number and my signature and take that t-shirt to the bank and challenge them not to cash it. But you build wealth in your sleep, which includes knowledge. Stock, bonds, home ownership, real estate, businesses that compound. You make money during the day. It's called making a living. You build wealth in your sleep. So I'm on a tear now because I think that we're at a tipping point. Mm-hmm. And we've already missed one mark. I think Reconstruction started the third one, 2020. It was pandemic, which caused everybody to slow down and look at TV. George Floyd's murder. Without the pandemic, folks would not be looking at George Floyd getting murdered on TV. That was God to me. So then came a 400-year social justice reckoning of Black America. $100 billion flowed from corporate America to Black people. I don't think we were ready. We missed the mark.
Well, why do you say we weren't ready?
Because we didn't have the business plan. We didn't have the strategic plan.
Infrastructure.
We didn't have the infrastructure.
Yeah.
We didn't have the credit. We didn't have the access. We didn't know who to call. We knew who to protest. We didn't know who to partner with. All right. And the folks issued a press release. Who called the folks with the press? Who called the people who issued the press release and said, here's my business plan? I'm talking to these people. I'm telling you, they got a free whatever. They issued the press release and no one ever called, most of them, with a solution. Now, charity was a very small part of that. A lot of that was mortgages, business loans, things like that. And I've already told you the average credit score for Black people is 620. It's the lowest of the country. So is somebody being racist when they don't give you credit, or are they just making a good credit decision if you're a 500 credit score? I'm not giving you a loan at 500 credit score. I love you.
Well, we do have to address the systemic issues, because I don't want them to, there's systemic pressures that have caused that though as well.
Which thing? Which thing are we talking about?
The credit.
Yeah, without question. I've already said racism is real. Look, redlining was real. That was the FHA. We didn't get the GI Bill. We didn't get the Homestead Act. That was 270 million acres, 10% of all American land. I'm not denying the story. I'm saying today, if your credit score is 500, you don't pay your bill.
Straight up.
Did I miss something?
Right.
Did I miss something?
At this point, Pookie
didn't pay your car note. Don't be chasing the tow truck down the street, calling them, cursing them out. Did you make? Are you 4 months behind or not?
It's hard to be at 500 these days. I'm not.
Yeah, I mean, the resources there, information there.
You look at the neighborhoods that we care about. We drive by this every day. We normalize it. Listen what you check casher next to a payday loan lender, next to a rent-to-own store, next to a title lender, next to a liquor store, next to a pawn shop. That's a 500 credit score neighborhood. And it's 15 minutes away from a 700 credit score neighborhood. By the way, Lincoln Park, 700 credit score, I think it's Chicago. Garfield Park, 500 credit score neighborhood, 15 minutes apart.
Yeah, 13 minutes, yep.
I mean, Atlanta, I can do the same thing. LA, I can do the same thing. You tell me the city, 15 minutes apart. You live 20-year longer life, gentlemen. 15 minutes apart. You live to 61 years of age. You don't even get to Social Security. In the hood, DA-HOOD.
Not to be confused.
Huh?
I said not to be confused with the hood.
You live to 81 years of age, 15 minutes away. Because the credit score, it's not about the credit scores, the trending indicators of hope, well-being, belief, confidence, joy, optimism, whether you believe you can or whether you believe you can't, you're right. I can't guarantee you that being positive is going to make you a success, but I absolutely guarantee you that being negative is going to make you fail. So when they have us depressed, distressed, pissed off, frustrated, upset, and focusing on anger, they won. So yeah, racism is real, all that stuff. But did you pay the car note or not?
Yeah.
Right.
Am I missing something?
You're right.
So you say, well, people say, oh, banks were racist. No, that was in 1920, 1930, 1940, 1950. The family owned the bank, and yes, the family was racist. Look, now I own the bank. I own stock in Wells Fargo, Bank of America, Citigroup. I own all these. These are publicly traded companies. You know what they want? Good loans. They want loans that pay back. They don't care what color you are unless you're producing green. So I got so passionate I missed the dang on question you're asking me.
I think we got the point.
I think we got the point, though. The mission that you've been on.
We got the point.
Yo,
I just think that, like, I just got to a point where I'm like, look, I don't care whether you like me or I like me. I'd rather you respect me and learn to like me than like me and never respect me. Thanks. I would feel horrible if I didn't give everything I could to try to make sure we didn't miss this next moment. So look, when I say we missed the moment, I give you half the story. What one of the worst things that this administration is doing, in my opinion, economically, is this tariff strategy and the immigration strategy. You're going to see a lowering of GDP. It's not my opinion, it's math.
Yep.
Right? I think they're winning the battle and losing the war. Conversely, I think that Democrats saying defund the police was stupid. If my mother is getting knocked over the head on the south side of Chicago, you know who I'm calling? The police.
Well, I think the defund the police thing, to play God's advocate here, I think that was to say, like, we've militarized our police to a point where we spend more money on policing than any country in the world, right? Like, the police they're okay. Let's spend some money on community centers. Let's spend some money on prevention as opposed to reaction.
I can't believe I'm saying this to you because you're a marketing genius. I can't believe I'm saying this to you. But, half a success in life is marketing and messaging.
That's a fact.
So the only problem with what you just said is that you're rational. Markets don't respond to just facts. It's sentiment.
Yeah,
that's a fact.
You guys talked about that before I got on the show. It's sentiment
and narratives.
Cryptocurrency is sentiment.
Right. Yep.
Now Bitcoin's locking in, but a lot of these things were just, crazy stuff. It's emotions, and so Dr. King was not just a brilliant preacher; he was a brilliant marketer.
Mm-hmm.
He wouldn't march before 10 or after 3 p.m. because he needed the media not be pissed off. They're getting up early, and they needed to get that film to New York City before 6 o'clock news. He was a brilliant marketer. Mm-hmm. He knew how to frame the issue, and the marches had a beginning, a middle, and an end. And he actually wanted the white folks to win, just like he wanted black folks to win. You cannot have a situation where it's win-lose, not win-win. So yes, I agree with you about militarism and all that. But you know what? No police jacking me up at my house. In fact, when I hold a party, The police are stopping directing traffic outside my house at my request. They couldn't be kinder.
Well, you're also
in a place of privilege.
You're a very wealthy person.
That's exactly my point. I'm trying to get us to a place of privilege. When you're in the hood, DA-HOOD is exactly what you just said. I'm trying to transform the hood to the community. Do you know what an inner city is in Paris? I'm sorry, I just gave it away. In France, it's Paris. An inner city in the UK is called London. An inner city in Turkey is called Istanbul. And we are gold mines. Our inner city are gold mines.
Mm-hmm.
But we own 44% of homes. Black people own 44% of homes compared to 75% of our mainstream counterparts. Just buy the dang on house. Stop renting uptown with people with money you don't have to impress people you don't know about stuff that don't matter in a place that don't want you. Buy hood adjacent. Buy it, rent it. Buy it, rehab it, and rent it. Buy it, rehab it, and live in it. Build wealth in your own community. Then hire the lawyer. Hire the title company, but hire the maintenance companies and start creating an economic engine in our own communities. And then all of a sudden start demanding as a homeowner that police start doing policing versus something else they're doing, which is, praying or whatever it is. I agree with your analogy completely. By the way, poor whites have the same analogy, the 500 credit score neighborhood I just told you about poor blacks. So it's equal opportunity jacked up. Now, what I'm saying is that when we said defund the police, folks already have an opinion about us. It's not good. Markets already have an opinion about us. It's not positive. So when we say that, it's signaling a sentiment. What we have got to do is surprise people and say not just Black lives matter, Black capitalists matter. We got to become capitalists at scale. We've got to become stakeholders. This country is center slightly right. I hate to break this to people. This is a capitalist democracy. And even if you want to distribute money like a socialist, you got to first collect it like a capitalist.
Capitalist, yeah.
The people running around talking about socialism are worth millions of dollars. I hate to break it to you. I don't want to name names, but I know their net worth. They're not giving their paycheck to the poor. They're not living in a tent. They got
doing well.
Chanel purses, town car services, car notes, mortgages. The people telling you not to own a home, own a home.
Quite a few of them.
So I got to a point where I'm like, I'm gonna tell the truth. Like it, don't like it. I don't really care. I'm a free agent.
Well, let's talk about that before you leave, because we do need to create more entrepreneurs, and definitely appreciate you coming on. But Invest Fest 2025, a few weeks away, and we met in New York. Actually, it was in New York for the time dinner, and I was saying that we definitely need you for this year for Invest Fest, and you kind of said like, okay, I'll come if you need me, but I want it to be impactful. I'm paraphrasing. Yeah. Not just like, sit on a panel and have a fireside chat. So we thought about something that we thought was impactful, and we got it to your team. So, and you guys like that idea. So what we're going to do at Invest Fest, this is the first time we're announcing it, is that it's like a mentorship program that's valued at $25,000, I believe, correct? And it comes with 8-week small business development training. It comes with one-on-one financial coaching. It comes with access to a masterclass webinar. It comes with access to capital. It comes with mentorship. It comes with business plan development, Shopify, e-commerce platform, and tech support. So pretty much it's like a business incubator of sorts, right? To get an entrepreneur, to get a business to that next level. And like I said, the value is $25,000. I think it's probably even worth more than that if it was on just the free market. Okay. So what we're going to do is that we're going to have a competition. So at Invest Fest.
By the way, it also comes with 2 hours with an attorney, 2 hours with an accountant, 2 hours with a marketing professional, 2 hours with Shopify e-commerce executives. So you're right, it's worth well more than $25,000. And it is, and even if you have an existing business, you can have a sister business that's e-commerce. You can have a restaurant and an e-commerce sister business. You'd have a nail salon and e-commerce sister, a barbershop and e-commerce partner business that is online 24 hours a day.
And so we're going to open it up to all the entrepreneurs that's coming to InvestFest. You can go to investfest.com/Operation Hope giveaway, but the tab is on investfest.com. Fill out the form because there is a submission form, and there's some requirements that you have to meet. Like you have to be in business, I think, for 6 months. You have to have an LLC or some type of legal document to say that you actually have a business. But the winner, there's going to be 5 winners chosen, and those winners will make it to be on stage with Mr. John Hope Bryant himself. And it's going to be like a mentorship actually happening in real time where they're going to tell him about the business. He's going to give real-time feedback, and then he's going to pick one of those 5 people. They're going to be like the grand prize winner, and they're going to get that whole mentorship package that we just talked about. So it's a great opportunity for a variety.
That's more than 25,000 right there just to get the advice.
Right, exactly. On stage. And that, I thought it was great because a lot of times people say like, okay, how can I actually meet people? How can I connect with the person I'm trying to connect? So at the very least, 5 people will be on stage.
Yeah. And
that's a connection right there. And then you're getting real-time feedback. Like I said, he's going to hear your business, hear your pain points, give you real-time feedback in the moment. And then it's going to be fun too, because you got thousands of people in the crowd also. So I'm sure that the crowd will probably be engaged.
Sentiment.
And John's a great entertainer as
For
well.
sure.
That's an underrated quality that is important. It's important. You got to be engaging and entertaining. So I'm sure he's going to have fun with the crowd and gamify it. So man, this is really, really, really great opportunity for any entrepreneur. All you have to do is just go to investfest.com, fill out that information. I don't know why you would not at the very least apply. It doesn't cost any money to apply. If you're going to InvestFest and you have a business, even if you're a vendor at InvestFest, you should be applying to this. This is something that is very, very, very helpful and beneficial.
So first of all, I want to commend you brothers for doing this because it was a private conversation we had. No one would have never known if you guys said, nah, that's too much work. Never mind. I mean, we were in New York. It was just you and me.
Yep. And
we talked, no one heard it. And I whispered in your ear essentially. And I basically said, you guys don't need me. You got a baller alert. You got everybody named Mama coming to this thing, and my wife's going, everybody's going, Charlemagne's going, everybody's going. You don't need me. And you pushed and you said, no, we really want this to be special. And I really commend you from not just wanting to be PhD, but PhD too, and wanting to deliver substance to people. And so you designed this, and I'll be honored. Me and my team are honored to deliver with you this content. Let me say, this 1MBB program, 1 Million Black Business Initiative, which is backed by $190 million from Shopify, relationship capital. That's a story in and of itself, how that came about. But it's real. And we've created, nurtured, supported 450,000 Black businesses since George Floyd's murder. There's only, I think, 3.2 million Black businesses in America. So what's that, 10, 12%, give or take. And so this is a very real thing. It's transforming for people. Shopify, after your first sale, they'll finance your second sale. And there's just something, they're going to give you a payment system.
And they give loans. Shopify gives loans too.
Yeah.
Yes. Yeah, exactly. And avoids the credit score, by the way. Anybody doesn't like credit score, there's no credit score. They're saying if you made a sale, then they're willing to finance your second sale and as you grow. And folks have created, our people have created multi-million-dollar businesses on this platform. I was on a show in, I think it was Roland Martin, and people were like, well, why is Shopify doing this? Like, what's the hitch? What's the catch? I'm like, they want more customers, right? So 3% of their shops are Black. They want 10% of shops that's Black. I love that. I don't want charity or handouts if I can avoid it from anybody. I want a hand up, not a handout. And I think that's what we want. And this goes back to the original comment about relationship capital, because I'm going to agree to meet. This is a bonus, separate from your conference. I'm going to agree to meet with all 5 of the selectees individually on a one-on-one meeting. I'm gonna give each one of them 45 minutes in person if they want it, if they're not in town. That and that's separate from the conference, and I'm happy to do that. And they're going to be now integrated with in the Shopify world. E-commerce goes back to AI, by the way, and technology. They're going to be integrated. They're going to meet lawyers, accountants, top professionals. They're going to build a new culture. Because the other thing is also true, man, is that you hang around 9 broke people, you'll be the 10th.
For sure.
We have got to start getting better company. Right? So I love that you guys are bringing. I don't know anybody else can do it. You're bringing tens of thousands of people together at one time on financial literacy. It's brilliant, and we should all be supporting that.
We appreciate you, my brother.
Appreciate it, my
Thank
brother.
you.
Always fun, entertaining, and educational conversation every time.
Can I say one last thing? Because I want to clarify something. Somebody's going to say that I'm jamming up, Democrats or whatever. No, I'm just trying to tell you the truth so you can win, right? The president didn't win the last election. Democrats lost. That's my point.
By a landslide. Yep.
By a landslide. Many people just in fact, the third Charlemagne told me there was a third candidate. It was the couch. Right?
Yeah.
People just sat at home. And what I'm saying is, if I don't want to talk out of school. I told somebody who matters that if they became the Bill Clinton. Yes, Bill Clinton. He had low unemployment, GDP high,
matters,
a surplus, not a deficit, a surplus. All the economics were going in the right direction. He could talk to the lowest of these, the highest of these. He was a capitalist. He was a capitalist Democrat, right? And my ideal politician has a Republican head and a Democratic heart. If we can just get back to that, why wouldn't Democrats embrace capitalism? I don't get this. Like, we're all living in this world of money, but we're acting like it doesn't exist.
Do you think that it was Do you think that it was economic issues or more social issues? Because I felt like they ran on abortion, they ran on DEI. They like the Republicans did a good job of targeting emotional issues that their base really, like transgender rights, for instance, right? Like that, like they really, really hammered that, and the Democrats couldn't pivot away from it. But that doesn't even that affects probably less than 1% of the population. But that was like one of their main talking points. I don't think that they really targeted the economy too much.
So I love this conversation. I love talking to you guys. You're so wicked smart. And I love that do these like hard, good questions. There's triggering and there's transformation. We get confused and distracted by the triggering because we're an emotional people. And we get so wound up in the triggering, we're missing the transformation. There's so much I could say, but I'm trying to consolidate because we don't have a lot of time. I'm happy to come back and have this conversation because I think this is a really important conversation. We missed this by a mile. By the way, I encourage all of your listeners to go watch on Netflix, Mr. McMahon. It's a documentary about WWE.
It's great.
Yep.
It is disgusting and amazing in the same breath. And by the 5th episode, you'll get an aha. By the 5th episode, you'll be like, oh my God, I've figured this out. They turned this guy into a WWE character. Same suit, same shirt, same suit color, same tie color, same shoes, same hair color, same pen, same place.
Same with Floyd. Same with Mayweather. He up shape.
Who you talking about? You saying they turned Trump?
I didn't want to mention his name. The presidential candidate turned into a WWE character. Billionaire, tough talking, underdog, always attacking the big dog, always, fighting for the out and from the outside, this whole narrative. So by people talking about his character, talking about this and he's this and that, you're just feeding in to his narrative of the population he was really trying to get to. White men felt emasculated. He triggered that and then transformed them. Poor whites felt left out. He said, I'm going to be here for you The opposite of that is the triggering. That's DEI is a signal that says black people, urban America got too much. So he's going. But he's really talking to poor rural whites. Mm-hmm. I did credit score. I get analysis of all the swing states. They're all stuck in the middle. They're stuck in the middle, and they had too much a month at the end of their money. That was an economic liberation conversation for them. Why does a woman stay with an abusive man? If you have 3 children and the husband's abusing them, why do they stay with them?
Financial issue.
Financial. Roof over your head, food on the table. Okay, he's abusing me, but he's taking care of my kids. I think that was a message from. Again, I hope I'm probably saying too much, but I think that some women saw this guy and said, you know what? I don't like this. I don't like that. But economically, I'm going to be okay.
He's a more viable option.
Black men who didn't trust government in the first place said, well, I got a check from him before. Financial illiteracy, right? Because he was against it before until he was for it. He was against it. It passed. And then he's marketing. He didn't put his name on it. And because we're not financially literate, we thought the check came from him. They said, well, at least I'm going to get paid. That hasn't worked out very well. Now, has it? Latino men are traditionalists. And they think that their man should be head of the household. The last person they're going to vote for in a traditional household, probably, is a woman. I'm just saying.
Being honest.
So, I mean, this was like 10 ones equal 20 strategy. It was economic in nature with triggering all over the place to get people to say, you know what? I don't like this. I don't like that, but I really don't like this other thing. And then we helped by talking about everything, but I'm going to improve your tabletop economics. I don't know how you get $9 trillion of money. America's never had $1 trillion of aid. Sorry. No country has ever had $1 trillion of stimulus. No country's ever had a T in front of it, gentlemen, of stimulus in the history of the world. We had, 6, 7, 8, 9 trillion since the pandemic? That was a Democratic administration. How do you screw that up?
It's a hard thing to do.
You had an infrastructure bill that built roads, and you could put people with a high school education to work, black and brown, urban, and white rural. Why did that wait? I haven't seen one announcement. I didn't see one announcement about a bridge, a road, a project. I mean, we're just horrible marketers. Not we. I'm an independent. Yeah. I just think that they were horrible marketers, like just horrible.
Wrong issues.
Yeah,
and were horrible on messaging.
You left out the 13 million people that elected the couch as well.
Repeat that?
I said you left out the 13 million people that elected the couch.
That part. That part. who voted in the last election.
Exactly.
Look, I like math that doesn't have an opinion. I had an opinion about how this was going to turn out. I tried to give some advice. They listened until they didn't. And it didn't turn out so well. And I think that this is all economic. I think that this, at the end of the day, people want to. I mean, it's about the economy. One of the presidents said, "It's the economy, stupid." I forget which election. It was. So yes, you're not wrong in the triggering points, but I think you're living in the biggest reality TV show in the history of the world, and we're all extras. That's a Charlemagne quote.
Well, my brother, thank you for coming. I appreciate it.
Appreciate you.
Thank you. And yeah, get that fly situation.
Yeah, we're gonna get
I'm eyeballing that wall.
Making a blowtorch.
Exactly. But he hasn't got me off my game. I'm
locked in.
Yeah, keep John safe.
I hope this has been useful.
No, for sure.
But look, we got to save our country, man. We need each other, and everybody needs us to succeed. And we need for them to succeed. I need white men to succeed. We need everybody in this game. We just want our share of it. We want to participate. And the world needs us to participate. I think God needs us. We're the pulse of decency in the world.
That's a fact.
Yeah. Yes.
Always
Amen.
Have been. Always have been.
Appreciate you, my brother.
All right. Thank you.
Talk to you soon.
All right. Okay.
Wow.
Spirited conversation.
Absolutely.
Yes. Never a dull moment. John Hope Bryant. Always a pleasure when you get the chance to talk to John Hope Bryant.
For sure.
Take advantage of that opportunity. Like I
The
said,
giveaway is amazing.
Yes, for sure. Anybody that has an InvestFest ticket, you're free to apply. Go to investfest.com and hit the link for the John Hope Bryant giveaway, Operation Hope giveaway. And as I said, it's going to be 5 people chosen, and they're going to go on stage with him at InvestFest live. Tell him about your business. He's going to give you real-time feedback, and then he's going to pick one of those people to actually be the grand prize winner. And the grand prize winner gets the $25,000 mentorship package, which includes one-on-one financial coaching, access to capital, mentorship, business plan development, access to the masterclass webinar, 8-week small business development training, access to self-placed online business learning management system, Shopify, e-commerce platform, and tech support. I mean, the whole nine. He's just going to throw everything at you as far as if you can't be successful with that, it's just not going to happen.
And if y'all see me on stage, I'll apply it.
Small. Every large business started as a small one.
For sure.
And vendors can apply also, but
I think that'd be a prime audience. You're already there. You already have a business. Why wouldn't you want to 10x it?
So
45 minutes with him is
doing a lot for y'all, man. We got the pitch competition. And this is all stuff that we've taken ourselves out of, by the way, for all you YouTubians that always like to have something to say. The pitch competition with Paul Judge proven in the space. This John Hope Bryant, his team is going to run this $25,000 mentorship program, and he said he's going to give everybody a one-on-one even after InvestFest.
That's amazing.
Proven in the space. We got some other stuff. Bevel,
they'll be back this year.
$25,000 to a vendor.
Yep,
they're going to pick a vendor in the vendor marketplace, give them $25,000 for their business. Make a review video about that,
please do that.
That'd be great. Sponsored by Bevel. We may be able to get you a sponsor for the AdSense boost.
Yeah. Listen, make sure you tell them that. Make sure you tell them that. Guys. Yeah.
Shout out to John for being fearless and not.
He said some things, right?
Yeah, edit point. Cut here. What is it? Control V? What's the cut part?
Cap cut.
Immediately. What?
I think we went overtime.
We definitely did. We definitely did, man. Shout out for y'all rocking with us. Appreciate that.
Stay tuned. Blackout.
Yeah.
Hold on. Before that, and what can they learn from the way? Because budget it's a few who have that. They don't even almost need the question. What can they take from that when networking at InvestFest or the pitch competition?
I think he started by saying, "I'm always ready." Right before I'm always ready.
Yep.
He's always ready. He understands. He's a master of his content. He's a master in his space. He understands it. It doesn't matter what the question is. This is his space. He's dedicated his life to it. This is his life's work. And when he speaks, you can feel it. Right? This is a passion for him. This is his purpose-driven stuff. And so he's always ready at any moment. And so I would encourage everybody. You never know who you're going to run into. You never know who you're going to see. You never know what moment is going to present itself. Always be ready.
And the good thing about Market Mondays, too, is that in InvestFest and everything that we do is that's very eclectic group of people. Like, like John's a capitalist. So, when he talks, it's not emotional. It's a capitalistic standpoint. But we might bring somebody like 19 Keys on, and they might have some differences. They might have some similarities in some regards as well, right? Or we might bring somebody, it's just like you get different. Everybody's not going to think the same way.
Yeah. So
it's up to you to take different things from different people and make your own life thesis, your life path out of. But you got to bring different people on from different walks of life. But definitely Blackout 10 o'clock. Earn Your Leisure. We got 85 South on 6 o'clock on Thursday. Get your ticket to InvestFest. IanInvest.com. Join Stock Club.
No Stock Club call this week. Next week.
And shout out to the 6. Shout out to Toronto. Shout out to SGA. Shout out to his entire family. I know his pops guys, his camp this week. Wow. No fluke. So they're doing they got a whole weekend that's planned. They got financial literacy. They doing pro-am games up in the 6. And who knows, man? You never know. Your favorite show might just happen to pop up there. So shout out to them, man. Shout out to all our team in the 6. Shout out to Daniel who was on.
Shout out to Daniel. I saw Daniel
on Blackout last week. Yeah, he was in Atlanta with y'all. Yeah, man, Toronto, that's our favorite place. So yeah, make sure y'all pop up.
We're overdue for a trip.
Yeah, that's a fact.
Let's get it. Let's get it.
All right, y'all. Love is love. We'll see y'all Wednesday. Be good to each other. Peace.